afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. Markets are off the day's high but are holding on to gains. IT stocks lead the gains while banking and financial stocks see marginal cuts in trade. MMP Industries withdraws its plea in the Supreme Court seeking termination of insolvency proceedings against Binani Cement. Hero Enterprises and Dabur's Berman family have put in a combined bid for Fortis Healthcare, offers to pay 500 crore cash immediately to make company debt-free. And Infosys kickstarts the fourth quarter earnings season for Nifty companies by reporting numbers later today.
Well, the markets mixed bag, you would have to say. The banks are not participating at all, and maybe which is why there's been a bit of a pullback in the markets as well. As you can see, we're trading reasonably okay at somewhere around noon or slightly post noon, but post that we've come off a bit, not at the lowest point of the day, but still well off the highs of the day for sure. The Nifty Bank, in fact, is trading marginally in the red. About 1,050 odd is the level. But look at that, this correction happened predominantly because the Nifty Bank dragged the indices lower. Maybe it's the weekend, maybe something else, but just playing it quiet. The mid caps and the small caps too aren't really flying around too much in trade. Remember, yesterday the small cap index was in the red. In today's session, flying very, very flat. The heat map, compared to what was, I think the quantum of red has just kind of overtaken. At a point of time in the afternoon, the quantum of green was much higher. Now about it's even Stevens, and no clear trends. So in technology, while TCS, Techem, Wipro, Infosys are doing well, I think HCL Tech forms a part of the losers list, so down about 1.5%. BPCL and HPCL and IOC, after showing whiffs of some spunk yesterday, are trading marginally in the red. And amongst index gainers, I think it's Adani Port. Yes, Adani Port, which is trading at the highest point of the day. What's trending today? 2 or 3 pockets that you need to watch out for. The discretionary spend companies, by and large, seem to be doing okay for themselves. So, including autos, yes, but look at the pure play discretionary spends for different reasons, of course. Indian Hotels, there is a brokerage note that has come in. Page Industries has been continuing to rise and shine and hitting fresh highs almost every second day, and this one continues to do well. But as I said, discretionary spend, look at what's happened to companies which are trading in the auto space. So Ashok Leyland, TVS Motors, Escorts, all of these are trading really well. In fact, Escorts, by the virtue of the move today, is actually trading at fresh highs for itself. So this one is doing well. And speaking of Escorts, actually look at what's trading at new highs. Chambal Fertilizer, Future Life, Shakti Pumps yet again clocking in some very strong moves. So these are the stocks that are doing rather well for themselves in the session today. Not necessarily all of them in FNO, and which is why we asked Navneet as to what is the liquid universe doing today, Navneet.
Well, Neeraj, Pidilite and Escorts are featuring in my list for the day, but let's talk about the futures and options trend. We've come off the day's high. Nifty reclaimed the 10,500 mark in today's session, but there was some bit of selling at higher levels, and actually the Nifty futures, which have been trading at a discount or rather no premium, are still about trading just about flattish after 5% addition in terms of open interest yesterday. We're seeing on the screen Nifty futures have seen addition of so far 5% in trade. Pull up the bank Nifty futures, they too have been trading at a discount, and that continues. 10 to 12 points discount for bank Nifty, and as Neeraj highlighted, no contribution is coming from the banking space today. So we've seen almost 8% uptick. We'll see towards the end whether there are some short positions being built up for the bank Nifty futures in today's session. Well, in terms of options data, what's happening? We've seen call writing coming in for the 10,500 strike. If you look at that strike so far, that's added nearly about 7.8 lakh shares as we speak, actually. And even the out of the money call strikes for the likes of 10,700, that's seen significant addition of 15 lakh shares so far. On the put side, well, the writing continues for the 10,500 strike. The 10,500 put has seen addition of 15 to 16 lakh shares. So that tells you the fight is actually now shifted from the 10,400 mark to the 10,500 mark. After reclaiming that, there was some more call writing which was seen in the system. In terms of stock futures, well, as Neeraj highlighted, Escorts, which is trading at its all-time high, it's gone up on very high volumes on the cash side, 3% higher for that counter. Do watch out for the delivery data here. Looks like more of cash-based buying, but even on the future side, definitely traders are betting on that. 17% higher, that's telling you there are fresh long positions being taken for Escorts. The other one is Pidilite. Now, this stock has been taking baby steps in the last last few trading sessions I've been observing. Today also just up over 1%, but it's touched its all-time high level. Even if you look at the futures side, on YTD basis, this counter has been doing well. It's up 12%. On the futures and options side, there has been built up of nearly 13% in terms of open interest addition. Futures are trading at a discount, but still this counter has seen some bit of strength in the last few trading sessions, and it continues to trade around its all-time high levels.
Yeah, well, so it's discretionary consumption by and large, which seems to be doing really well for itself. Let's get your market voice. Ajay, Bodke, CEO and Chief Portfolio Manager at Prabhudas, Lilladher, joins us right now on the show. Ajay, if you can hear me, thanks so much for joining us at Bloomberg Quint. This is Neeraj here. Good afternoon to you. What's the sense been, Ajay? This
Good afternoon, Neeraj.
Pullback that we've seen, does it signal that the markets are shrugging off the negativity of variety of factors, including what's happening back home on the banking side, but the trade wars, geopolitical tensions, etc., etc.?
I think we are sort of constructive on the Indian markets with a medium-term perspective, and we think that the rally still has some more legs to run. We are in the midst of, and the earnings season will be kicked off by Infosys today. And I think the market will be keeping a very close watch on whether the revival in corporate earnings that started in the last quarter is gathering steam. And our belief is that it should gather steam. And with the exception of public sector banks and corporate-focused private banks, where the earnings will continue to disappoint as a result of the accelerated provisioning necessitated due to RBI's diktat to the banks to provide adequately. I think the other parts of the market, I think, should clearly send a signal that we are well on course for at least a high teens kind of earnings growth in the current financial year. So broadly also, our belief is that a sense of decoupling will happen as you move ahead in the year between the corporate earnings profile of India vis-a-vis the developed world, where the earnings clearly had bottomed out around 15 to 18 months back, and any noise on the turbulence in global trade due to ratcheting up of rhetoric by the US administration and fears of slowdown in the earnings there. I think on the Indian side, I think it will play out very differently, because our earnings cycle has bottomed out in our belief in the last quarter, and we'll be moving northwards from here. Secondly, I think the after effects of both demonetization and the rollout of GST, the hiccups that the economy faced, and the impact that it had in terms of deceleration in aggregate demand, I think we are those issues are well behind us. So from the economic perspective also, one has seen on a trot the IIP numbers looking northwards, and inflation continuing to remain benign, necessitating RBI also to cut the inflation forecast for the first half of the current financial year by 50 basis points. And lastly, I think the structural reform of the IBC is something that the market hasn't fully come to terms with. The positive impact that this will have over the medium term and long term over the on the entire capital that has been clogged in the system. Because as per, I think, a World Bank study, I think it used to take 4.3 years on an average for a problem case to be resolved before the IBC regime. And now by law, within 270 days, you have to clear every case or the company goes for liquidation. And more importantly, only 23 paisa used to get realized for every 1 rupee owed to creditors in the pre-IBC regime. And although Bhushan and other steel companies are not the benchmark, but the realization that is happening in case of many sectors is far in excess of what used to happen in the pre-IBC regime. And mind you, this is happening before 270 days, and one doesn't have to wait endlessly for years for realization to happen. So I think all in all, my belief is that the Indian markets would surprise on the upside for FY19, and the downside clearly looks quite limited.
Okay.
The only headwind that I need to point out is in case the oil were to flare up and were to reach levels far higher than the current levels, then that could act as a very big drag and a headwind, because that in turn will have implications on macros, which on the edge, which sort of on the margins have started slightly deteriorating.
Okay, well, oil prices have been a concern, and we've been chatting with our market experts about what would be the impact on the oil marketing companies which have been under pressure. Ajay, but I want to start off with the banking space. You did mention that the earnings will be suppressed in the fourth quarter, but are there any picks from the private or the PSU banking space that you guys are bullish on?
Yeah. I think we have refrained, in fact, for the last 3 or 4 years on taking an aggressive call on corporate focused banks. And even sort of in the interim, when the government had announced a pretty liberal package of recapitalization of PSU banks and the banks had shown a bounce, my view always was that the PSU banking space can only be a tactical buy. It can never be a part of a core portfolio, because over the long term, unfortunately, wealth generation has been lagging in case of public sector banks vis-a-vis the private sector names. And even within the private sector names, we have been constructive on HDFC Bank, Kotak Bank and IndusInd Bank, which are retail focused banks. The only corporate focused bank where we believe that the risk mitigation and the risk management has been par excellence has been Yes Bank, where sort of they have been able to corral the risks in some of the corporates where they have lent, and as a result of which their asset quality, I think, remains pristine as compared to the other private sector corporate focused private sector banks. On the NBFC side, I think we continue to remain positive on L&T Finance and believe that after the correction that one has seen over the last say 4 months, I think the underlying business continues to chug along quite well in case of L&T Finance, and we are expecting an earnings growth of 43% in FY for year ending FY18 and around 31% for year ending FY19. And with strong ROEs of around 18% expected in FY19, I think the stock is, in our opinion, trading at attractive valuation, and a 230 rupees of target price in the medium term is what we're looking at on L&T Finance.
Okay. That's the view coming in on the banking space, and they're also bullish on L&T Financial Holdings. Ajay, the other space, I can see some names featuring from the FMCG pack. You guys like stocks like Britannia, Avenue Supermart, something, which is already trading around their all-time high levels, and also Kansai Nerolac. If you could take us through the rationale on being bullish, what are the sort of target prices that you're watching out on these stocks?
Yeah. Britannia has been among our top picks now for the last 5 years. I think it's been a 10 bagger for us, and our bullishness in Britannia's franchise continues, essentially because there's still a way to go in terms of covering the distribution gap. I think the company has been focusing on the distribution architecture and growing in the markets in the Hindi belt in UP, MP, Bihar in particular, and also in the eastern markets where it lags the penetration levels as compared to the leader Parle. The other thing that excites us is the improvement in value-added offerings, the cream biscuits, cookies and wafers, where the margins are higher as compared to plain vanilla glucose biscuits. And thirdly, I think also the manufacturing architecture. I think the insourcing that the company wants to emphasize for the higher value-added products. So a combination of these three, I think will continue to play out. And on a YOY basis, I think most of the key raw materials, there are tailwinds that will accrue to the company. And that's why good volume growth, double-digit volume growth, and an improvement in margin on a YOY basis for the current quarter continues sort of, in our opinion, to make us bullish on Britannia. So I won't be too surprised if the stock were to reach, say, 6,000 levels in the medium term. Kansai Nerolac, again, we have been positive. The company will post double-digit volume growth in the current quarter. That's our estimate. Last quarter, I think the margins had come a tad under pressure because of increase in crude prices. Crude derivative prices have gone up. And the stock also has retraced from highs of around 580, 590 levels. It came down to 460, 470 levels, and now trading at between around 500-ish. It is trading. So there, I think the company had mentioned that they are in the process of passing on the increase in their costs being 50% of the business is industrial paints, 50% is decorative paints. In decorative paints, it is easier to pass on cost push. In industrial paints, because you deal with the car companies and two-wheeler companies, it is a tad difficult, but it happens with a lag. So I think the current price does allow a good tactical entry point for Kansai Nerolac if one takes a medium-term view.
Okay, Ajay, much appreciate you being with us today. Thanks so much for taking the time out. Look forward to have you on a slightly longer format next time, but appreciate your time with us today as well.
Thank you, Neeraj. Thank you very much for having me.
That's Ajay Bodke from Prabhudas Lilladher with his thoughts. Now, we're talking about pockets of spend, discretionary spends which are doing well. We're talking about some consumption names out there. I think if you club autos within the consumption pack or discretionary spends, then that's a space that is looking really, really good. Not just today, but over the last 12 months. The numbers are looking okay. The question mark is, do the technicals or the charts also show the same thing? Well, that's the question that we posed to Manav Chopra. He's with us in our studios to talk about, well, a specific set of stocks to start off with. Manav, really good having you. Thanks so much for joining in. We'll talk about the markets and specific ideas in a bit, but let's talk about charts of the auto pack. I want to start off with maybe the auto index.
Yes.
And tell us, why is it that you're choosing to show the auto index today? If we can have the chart on the screen.
Thank you, Neeraj, for having me here. So we have seen auto packs, has been in a very good uptrend, and it has been in a good uptrend since 2010. So if you look at this chart, at the lower panel is a price chart where the index has been rising in a series of high tops and bottoms, and the lower chart is the support line. So whenever the price tests the lower panel is the time where you get into that chart, into the index, and it gives you a very good margin of safety. So if you look at the chart recently, when the auto index topped out in December, it declined and it tested its long-term support line. So it definitely provides a very high margin of safety.
Okay.
So the time when you get into the auto index or any sector for that matter is basically you want to be a part of the trend, and you also want to enter when the prices are at crucial support levels. So
in your favor,
that is,
yeah.
yes, absolutely in our favor, and more than that, it is in 8 years channel formation. So any reversal at the channel, it further validates the formation. So exactly what has happened in the past,
Okay.
So we have seen whenever there has been some reversal formation, eventually there has been a sustained rally for at least 20%, and eventually it has tested the higher part of the channel. So looking at this current formation, the trend is definitely intact. Now, when we look at the higher,
The
chart on the top is basically a relative strength comparative chart.
Okay.
So it is derived by taking the Nifty auto index and we divide it by Nifty 50. So we get a ratio.
Why would you do that?
So we also want to understand. We don't want to see even the stocks which are showing absolute returns, but we also want to see if the auto index would actually go in future and outperform the broader index.
Okay.
That is one of the key important things. And we've also witnessed in the past that there has been a lot of sectorial rotations that happen in the markets. There has been phases in the past where auto packs, in spite of being in a good 10 years uptrend, there has been some pockets of consolidation. You must have seen that has been highlighted. In the past, this pocket of consolidation usually lasts for a cycle of around about a year, and then it sees a breakout on the upside.
Sure.
So at the current levels, when we see at this chart on the upside, we have seen approximate a year consolidation within the Nifty auto packs, and looking at the support that has been taken at the long term, and plus the consolidation cycle which is likely to come to an end. So I think eventually you will see a good breakout happen.
Okay.
And in the
post this consolidation cycle, we see a bit of a breakout that is happening.
Yes.
So it could happen this time around as well.
Absolutely, it could happen.
And there is a double
confirmation
via this chart as well.
Perfect. Yeah.
Okay, so that's as far as the autos go. Now the
Right.
question mark then therefore on the minds of everybody is that how do we play this? And if you want to play this via specific stocks, what are the stocks to look at? So let's get the first stock on the screen. There are 3 or 4. I don't remember which one have we gotten the first one. Okay, the first one is Tata Motors. Maybe it's Navneet, it's just a confluence of factors. Goldman Sachs, I believe, has come out today and said that there are reasons to buy into Tata Motors.
Last week among the Nifty constituents, the
That
stock's
too.
been gaining.
Okay, so explain the chart.
So this chart is completely opposite of what the auto index was showing. Auto index was in a broader rising channel, and this stock is in a falling channel formation.
Okay.
So, but one very key important thing, in spite of this stock being in a falling channel pattern, it has taken support at the lower end. And so when the stock is declining in a falling channel, so basically this defines that it is at a oversold level in terms of price, and within the channel this is the minimum target that it usually retraces up to. When we look at the lower panel, this is nothing but one of the indicators, which is an important momentum indicator, and we see this momentum indicator since 2016 has not breached this support levels. So it is saying that even though the stock has tested its lower support channel, but the long term, I'm talking on the long term, oversold indicators are at the bottom. And usually when there is and we have seen a small reversal that has happened from the oversold level. So usually in such formation, it is providing you a very high margin of safety. This is the time where you can go and take your high contra bets. And if you see at this chart very closely, last 4 weeks of decline that we've seen has been retraced in 1 week itself. So it is talking about a lot of short squeeze pattern that is coming into the picture. I sense in the near term perspective, the immediate support of 340, 350 would hold. It would actually go and test the levels which is close to the levels of 400, which is the upper end of the channel. And looking at the overall formation, I sense there could be a breakout that could take place, because when we look at the momentum indicators, the prices have formed a lower low, but the momentum indicators has not breached its previous low. So it is sensing that, it is at very much deep oversold levels, and a good retracement or a sustained retracement rally could be witnessed in Tata Motors.
Okay. Can happen up till 400, may even extend beyond that as well.
Absolutely.
Okay, that's interesting. What's the next stock on the radar, Manav? That's Eicher Motors.
Yes. So historically, we've seen, Neeraj, Eicher Motors prior to 2016 used to give sustained rallies without any brief corrections. But since past 2.5 years, we can see on this chart there has been good swing lows formed within a rising channel formation. So this rising channel are the areas which helps you to buy at the support and probably look to book profits at the high levels. So when we look at this chart on the upside, the stock has declined 20% from its recent peak. And when a stock is in a good uptrend, the momentum indicators, that is the oscillators, are very sensitive on the oversold levels. What I'm trying to say is that if a stock is in a good uptrend, the momentum oscillators will rebound sharply from the oversold levels and will add further, throttle for the bulls into the stock. So when we see if the stock has declined since past 4 months, after a decline, it sustained, it formed a bullish reversal near the support channel. So it added further confluence. Yes, the overall pattern is intact. Moreover, the auto index actually topped out in December 2017, and it started forming a series of lower lows. But Eicher Motors actually tried and started making series of minor higher bottom, which also further added some confluence. So looking at this chart and with the breakout on the monthly perspective, I'm quite confident the stock is eventually going and testing the higher part of the channel. So even at the current levels,
is what level?
It's close to 36,500 to 38,000. But on the immediate basis, looking at the momentum, 34,500 cannot be ruled out. I mean, that's the immediate target, but 38,000, 36,500 is the target that we are looking at.
Manav, I have a question there. So far, you said the outperformance will be due to stocks like Tata Motors and Eicher, which so far have been underperforming actually. So
Right.
do you think stocks which are actually oversold, they will be the ones to lead the rally if the Nifty Auto Index happens to go
Absolutely.
higher?
In fact, that's a very good valid point. Within the markets, we've seen a pocket of sectors outperforming, and within the sectors, there are stocks which take some leadership in different phases of their own cycles. So I sense in my picks, I have not mentioned stocks like Maruti
Right.
or Ashok Leyland or even Escorts. So I sense there are different cycles of stocks which will outperform depending upon the margin of safety. See, because at 10,500 index, when we are talking of some new investment ideas, the margin of safety plays a very, very key important role, and for the investment purposes. So I think keeping the cycles in picture, and the past performance, I think we have identified certain stocks basis on those criteria.
Okay.
Okay. Well, we have one last stock, Manav, that we want to talk about, and that should come up on the screen as well. I think one of them was Tata Motors, then Eicher Motors, and the next one on the screen, the last one, Hero.
Yes. So similar formation.
Actually, M&M. Sorry.
Okay.
Yeah, I think we chose. Yeah, there is M&M, right? This is M&M.
Yes, this is M&M.
Okay. Yeah.
So
we'll talk about M&M.
Yeah, we will. So M&M is also a stock which actually has shown some sort of different formation compared to others. This stock was in a 4 years of sideways consolidation when the entire auto packs was showing a good amount of series of outperformance. We can see within the rising channel, the stock was in a sideways time correction. correction. So usually we've observed that when a stock gets into a time correction is when the weaker hand gets out and the stronger hand starts getting into the picture. We look at the lower panel, which is the strength index, which talks about the strength of the stock. So even though when the prices were in a sideways correction mode, the bullish support was still held. So it clearly says that, even though it was in a time correction, this was not a distribution but more of an accumulation. And when the auto index actually started to come down from December highs, we did see, in fact, M&M started breaking out on the upside after 4 years of consolidation pattern. So this is something which should not be ignored, and I personally sense M&M in next 8 months or 10 months could be one of the best leaders of the auto packs. I have given a conservative target of 1000, but looking at the overall formation and this picture, I'm keeping the width of the pattern, which gives you an immediate target of 25%, but will not be surprised to see M&M towards the levels of 1500 to 1800.
Wow, we'll wait and watch for that. So, Manav, is that, well, a set of stocks that people can watch out for? Manav Chopra believes there is merit in going in the auto pack. A bit later on in the show, we'll get in Hemant as well and talk about his thoughts, not just on autos, but a bunch of other spaces as well. But for now, a very interesting management that we talked about before we dive full tilt towards the last one out of trade, and that's MMP Industries. It's evoked interest of veteran investor Kenneth Andrade's Old Bridge Capital, as a result of which Old Bridge picked up 1.26% stake, and the stock is locked on an upper circuit. So what's the company about? What are the numbers looking like? Let's ask that to Arun Bhandari, the CMD of MMP Industries. Joining in, of course, to take the conversation forward is Nikki Mirchandani from our research team. Nikki, over to you.
Thank you, Aniraj, for that. Hello and welcome to Bloomberg Quint, Mr. Bhandari. The first question that I have for you relates to your aluminium prices. Of course, they've been on uptrend that we've seen, risen as much as 16% in the last trading sessions. Are we expecting some sort of fall coming in your margins, given that aluminium is used as your raw material?
Based on experience of the last so many years, I can say that the margins will either remain same, or in my own view, they may go up. But I see very little chance of the margins getting compressed.
Sure, I get that. So you are trying to say that your margins are expected to remain at a good 14 to 15% range that we have seen so far in this financial year. And also, if you could help us understand the sensitivity that your margins have as compared to the LME prices.
Any increase in metal price, whether it's 5 rupee a kilo or 10 rupee a kilo, eventually over a period of maybe 3-4, at the most 7-10 days, that is normally acceptable to the customers to the level that the price has increased. So we don't see any chance of margins being compressed, but with the availability of stock at our end, in the short term, the margins are likely to increase beyond the level which the aluminium price has taken place.
Sure, I get that you cannot give us a proper number going forward in the next financial year, but I'd just like to understand a broad range that we can look at for the next financial year. And also, if you could help us understand, for every 10 rupee hike that we've seen in LME prices, how much percent of hike would you have to pass on to your consumers so that the margins are not impacted?
FY19 revenue-wise, we are expecting our top line to grow by 20%. Certainly. And in terms of margins, because of the aluminium price increase, it's actually the price increase of metal plus our processing and conversion charges. So metal price increase we always get, and more often, much more often than not, our conversion and processing charges remain the same. But in terms of such volatile aluminium pricing, it is possible that these margins will go up further.
Sure, talking about your top line growth, as you just mentioned, a 20% growth there. 200 crore is what we registered for FY17, which was good enough. And for the first half of the financial year, we have done a 105 crore kind of a figure. Given that incremental capacities are going on stream since the second half of the financial year, are you expecting a 300 crore sort of revenue growth in the next financial year?
Actually, as FY18 closure, that is 31st March of this year, we've closed at around 241 CR net revenue. So the next year will be more like 18 to 20% above financial year 18 closure.
Also, I'd like to understand a little bit about your bottom line performance. The company doubles its profit in FY17 to 18.7 crore, and in the first half of the financial year has done a profit of around 11 odd crore. What is the figure that we can expect going forward in FY19? Are we looking at doubling of profits in FY19 as well, say a number of 40 odd crore?
Well, our EBITDA margins for the company as a whole are expected to rise from the present 14%. In the coming year, that will rise to 15% or maybe 16%. And subsequently in the years 1920 onwards, there is likely to be a significant growth over this figure.
Sure. I'd also like to understand a little bit of contribution which is coming from a subsidiary of the company, which stands at 19.6% for the first half of the financial year. That is the Star Clips and Engineering business contribution to your overall consolidated bottom line performance. What is the contribution that we can look forward for FY19?
Okay. Star Clips and Engineering Limited is also a family company where MMP has 26% stake, approximately 26%. And the balance is with the promoter family, which is me and my family. And in terms of financial year 18, that contribution, which is presently 18 or 19%, that will increase by at least 10 percentage points. So it will probably be around in the region of 22-23%. In FY19, we think that margin will go up even further because the growth of the company is good and it's related to auto components and OEMs, and we see significant export as well as domestic potential ramping up in this current year.
Sure. If you could also tell us what kind of manufacturing and sale of aluminium paste business has given us a good contribution of around 8% in the last 2 financial years. What kind of incremental growth are we looking at from those divisions coming forward in FY19?
Actually, I must add here that MMP has now a joint venture company with Toyo Aluminum KK of Japan, in which MMP has 26% participation. And the paste capacity is steadily being transferred to a new project which has already started production in February of 2018. So the contribution of the paste revenue will, in this year, come down, but that will be replaced by an increase in the revenue from atomized aluminum powder, which we are going to supply to the joint venture partner. That company is called Toyal MMP India Private Limited, also in Nagpur.
Sure. So if you could just put a number to what kind of growth can we be expected from this particular paste division in FY19, that would be great.
FY19, there will be no growth in the paste sector. In fact, the revenue will come down, but it will not be completely wiped out because some part of the paste production in MMP is still continuing, and that is likely to continue for the next few months. But I think the overall share of the revenue will come down from present 8% to less than 2%, because the paste capacity itself is getting transferred to the new joint venture, where MMP, like I said, has a 26% equity. So overall, the margins from the paste are likely to increase, not decrease.
All right, just as you said that you expect the margins to expand going forward from this division, what kind of growth can we look at for the next financial year in that case?
Actually, in FY19, we have not even factored in the revenue and the profits coming from Toyal, because this is going to be the first year of full production. And so we will look into that in the year 1920. Toyal company has good potential. We do resale business in our new company for pastes imported from Japan. And this is, in fact, the largest capacity that Toyal has put up in India. It's probably a little bit more than what they have in USA, China, and France put together.
Sure. The last question that I have for you is the company in talks with other marquee names, other marquee fund houses, given that Kenneth Ardern has just bought in 1.26% stake in this counter?
Yes, we are holding talks with some good fund managers. Meetings are going on. They will continue next week also. But at this point of time, it's, I think, a bit premature to take names, except that, yes, they are marquee names.
All right, that was the management of MMP. Pretty much confident, says a 20% growth is what we're looking at in the top line performance of the company. Could be able to pass through the raw material prices increase that we've seen. Back to you guys.
Thanks, Nikki, for that conversation. And switching focus back to markets. Markets have given up the gains that we've seen. We reclaimed the mark of 10,500, but Nifty right now is trading just with gains of 18 points. And we're going to highlight Bank Nifty is the one which has turned weak once again. That's trading with cuts of nearly 36 points as we speak. Well, let me also introduce Himen Kapadia, who's right here with us in the studio. Hi, Himen. Thanks a lot for joining us. First, a call on Nifty and Bank Nifty. I know you've been pretty skeptical in the last few conversations we've had, and you've been more of stock specific. Would you still maintain that stance?
Good afternoon to you. Navneet, I thought 10,490, 10,550 was what I was looking at. We went to 10,520 today as far as the Nifty spot is concerned. I think in the near term, things are looking a bit heavy. Technically, academically, is it going to 10,550? I don't know. I have a feeling it has headroom to cover the gap at 10.7, but before that I'm seeing a hiccup of 80 to 150 points Nifty fall. What we're seeing today is we've seen negative divergence on the hourly chart by some of the indicators, though markets have made a new high, and in the Bank Nifty it's even more pronounced. So I have a feeling we'll see a bounce coming in this next 15 minutes. If we don't make a new high by Monday morning, I don't think we will. If we don't and we break 10,450, I think we're going to lose at least 70-80 points as far as the Nifty is concerned. So individually, stocks will do what they have to. Near term, I think the markets are slightly ripe for a correction. The bigger picture, 11 to 9950, the bounce is not yet over. But this one leg of the bounce is making heavy weather. Open interest has gone to 2.6. We started at 1.92. So much of open interest addition at this level, I don't know. It's iffy. So I wouldn't short, but actually I would buy a put, but I'd wait for a fall. I think so. It's around the corner.
Okay, and it's good to have a contra opinion. Manav, you're looking to buy Nifty, Bank Nifty,
yes, absolutely. In fact, we maintain a bullish view in the markets. Last week how Nifty retraced from its lows and regained its weekly support of 10,100. And moreover, from there, it has seen a sustained rally. That is what I had mentioned last time. We can expect a sustained move without any brief correction towards 10,600. Moreover, what happened was, there was too many short traps that has taken into place. And I believe if we see at the chart also a couple of days back, there were multiple, patterns which indicated for some shorting position which indicated. So I think as long as we sustain and hold above the levels of 10,350, we can expect this move to go to the levels of 10,600. Even for Bank Nifty, 24,800 is an important support levels, and looking at the weekly perspective, things still looks fine. The immediate resistance will be at 25,400. So once if we exceed that, I think 25,600, 25,700 is a possibility.
Okay, let's talk about specific stocks. I mean, you seem to be more comfortable taking stock-specific positions currently. What are the ideas that you have for our viewers today?
I think I like Bajaj Auto because it's been battered down badly. Having said that, we've spent almost 4 weeks not breaking its lows of around 2740. Deeply oversold. Volumes are improving. Indicators are turning positive. So I have a buy on Bajaj Auto at around 2780. Stop loss 2740. Target 2860. And the other stock is Tata Motors. I have a feeling that Tata Motors has formed a flag over here. We're going to give a breakout around 365, so we are at around 357. I have a feeling there could be a maybe a 35 point bounce from here. 25 point bounce till around 285 in Tata Motors.
Wow, all auto, it seems to be an auto day somehow. Just been auto stocks all across. Manav, aside of the auto names, for the short term, are there any trades that you have?
Yes, my first buy call is on Shriram Transport Finance. The stock has been a very good leader so far.
Auto connected, but okay.
But the stock has been in a very good up momentum. The momentum is very good. And at 10,500 index, it's time that you also be with some stocks which are showing some sort of a good relative outperformance irrespective. Because the margin of safety remains quite high. So, the momentum indicators are still in the buy mode. We recommend a buy into this with a stop loss of 1540 for an upside target of 1680. The other is from the IT packs, it's Tech Mahindra. You know, this stock after a good 3 to 4 weeks of consolidation has seen a good breakout on the weekly charts, and the volumes are also confirming the same. So I sense that there is a strong support for this stock at the levels of 650, 655. You know, post our recommendation, the stock has actually moved ahead, but a stop loss of 645 can be maintained for an immediate target of 690, and a positional for the positional target of 720 is possible.
Interesting. Okay, so those are the names to watch out for. Let's welcome our fundamental expert on the show as well, Anand Tandon, market expert joining us. Anand, good having you. Thanks so much for joining in. This up move would have surprised a lot of people. My question to you only is that, has it surprised you? Because and rightly so, you were bearish for most part. It went down to 98,900, 9800. From there, the move has been fairly strong. How would you describe what's happened over the last 7-8 days? And what's your stance now? Has it changed?
Well, from what I hear from the technical analysts, they all seem to think that, you know, 600, 10,600 is where it can go to. And since the market seems to be following technicals, you know, you ride along with that. But the reality is that I think the drift, to my mind, during the course of this year will remain on the negative. And therefore, you have to kind of assume that you will have to trade along the way, because it's unlikely that you will get any strong move one way or the other in a very short time frame. But the moves are enough to be, they are tradable moves, right? So if you get a 300-400 points move one way or the other, you could certainly trade along with it. The bottom line is that the earnings will determine the growth from here on. And the earnings are still looking like they are perhaps overstated. The expectations are still running ahead of reality.
Well, so what do you expect? Okay, let's start off with okay, we'll talk about Infosys in a bit, Anand. Let's start off with what's arguably the pocket of the day, and it has to be autos, and not just necessarily because the technical discussions veered around them, but for various reasons. Ashok Leyland getting a defense order, that's shooting up. Escorts continuing to trailblaze, touching new highs. TVS Motors, for example, has had a good move as well. Last week we had Tata Motors being amongst the best performing stocks too. What's the sentiment and what's the fundamental looking like out here? Two-wheelers, four-wheelers, tractors, what have you?
So, you know, this is certainly one of the sectors where a lot of hopes are pinned in terms of earnings growth, and not only for the current quarter, but also for the next 12 months. So the expectation is this will be one of the largest contributors to the earnings growth for the next year as well. And therefore, it's not surprising that in a market which is short of ideas and short of growth, anything which is growing will attract a lot of attention. However, that said, none of the stocks are particularly cheap. I mean, Tata Motors may look optically cheap in the sense that, you know, it is trading at less than 4 times EV to EBITDA FY20 projected earnings. But there is also a big issue in terms of, you know, the assumptions being made on what's going to happen in China and US. Both of the markets are looking a bit choppy, to say the least. So, you know, the estimates could go one way or the other. On the domestic side, if you take Maruti, for example, it's probably trading at the highest valuation it has ever reached. So there is no great valuation comfort, but because of the fact that the earnings will come through, you want to be in it if you are building a portfolio. Tractors clearly would be an outstanding performer. I think the numbers are justifying that kind of growth. So therefore, I'm not surprised to see the tractor companies do well. I think the CVs and HCVs probably have a longer runway because of the fact that the number of roads that are coming up will obviously will result in an increase in the truck availability as well. And therefore, you know, you should expect to see continuous demand coming there. I'm not so sanguine on what is happening on the two-wheeler space. I think the competition is fairly high. And the passenger vehicle, obviously, there aren't that many players. Tata Motors seems to be getting its act together, but it's still a very small part of their portfolio overall, at least in India. There are bigger players overseas.
Okay, that's the view coming in on the auto pack. Just want to highlight few stock. Pull up Tasty Bite Eatables. It's not a very liquid counter, but it has gone up quite substantially in the last last 1 hour of trade or something. It's trading with gains of 10%, but if you look at the traded volume in terms of shares, it's only 12,000, but still compared to yesterday, definitely the volumes have been on the higher side. The other one which has gone up on extremely high volumes today is Rupa and Company, and I've been observing this stock has been sustaining the gains that we've seen throughout the session today. It's still sitting with gains of almost a 10% in trade. Quickly, Manav, any thoughts on Rupa on the charts?
Actually, the stock has been a corrective decline from the highs of 590, and recently the stock has also tested its key support levels and have bounced from the support zone. So most importantly, we would like to see some sort of a sustained move above the levels of 468. Then when you would want to get in, the volume definitely indicates some sort of a momentum coming into the stock. But as long as the stock does not sustain above 460.65 on closing basis, I don't recommend getting into long, because the risk reward ratio also does not favor. And what I would just update, the stock has an important support at the levels of 420. So the stock is in a gray area mainly for the risk reward ratio, and we'll have to wait for some further breakout to happen into this.
Okay, that's the view on Rupa and Company. It's trading with gains of 10%. Anand, wanted your thoughts on fertilizer pack, because since morning, all these fertilizer companies have been buzzing, from the likes of Chambal Fertilizer, that's seen gains of 10%. We've seen FACT also registering good gains in today's session. RCF2, in fact, Chambal has touched its fresh 52-week high today. Any thoughts here?
Well, as I said, the farm input sector is obviously something that most people are looking at, for the simple reason that one of the great the triggers for this year's run is probably going to be government spend on the agri space. And how do you play that other than to look at things that are going into the farm? So whether it is the farm input or FMCG, which can be sold in the rural areas, that is the place where most stocks are getting attracted. Per se, fertilizers, I think, has benefited because of the change in the subsidy rules recently. The DBT, I think, is still a question mark in terms of how that will impact companies, because in my view, it will actually increase the working capital cycle of most companies. So companies which are well capitalized and have cash on their books will likely gain market share. And those which are a little more stretched will have to lose market share as we transit to DBT. So there is a sectoral play that may happen within that as well.
Anand, from fertilizers to technology, do you expect Infosys to really give us a sense of how the quarter could be for the space at large, or has Infosys long ceded that position to some other companies? And by and large, what do you expect Infi to do?
So I don't think Infosys is the bellwether that it once was. That doesn't mean that you cannot get an indication on the industry from Infosys. Clearly, they remain one of the leading service providers, and what they have to say will be looked at with serious, with serious interest by the analyst community. Frankly, I don't think anybody is putting too much of store in terms of saying that you will get double-digit growth for at least the frontline companies, but we do expect to hear that about what the outlook for the order book, etc., looks like, especially in the US, since there is a greater chance that this year may be better than most, because the kind of GDP growth that we are likely to see in some of these markets may actually restart spend in terms of the discretionary spend, and especially for the more traditional businesses. So you could find that the service businesses are doing well. Essentially, you're looking for the growth numbers and a guidance in terms of which sectors are going to do better. And so long as they don't have any negative surprises, I don't think that you'll see any significant downside in the stock.
Okay, and of course you can catch the entire management of Infosys at 4 p.m. today, or maybe slightly before that as well. CEO Salil Parekh, CEO Praveen Rao, the CFO D. Ranganath, and Human Resources Chief Krishnamurthy Shankar would be addressing the media, and you can hear that live here on Bloomberg Quint. Anand, take a moment to thank you for joining us today and giving us your thoughts. Let's wait and watch what happens. It'll be interesting to see what the markets do before we talk next. So looking forward to that as well.
Thank you.
That's Anand Tandon with his thoughts. Okay, now let's, before we move any further, actually we do have a management, but just before that, Heyman, if I can ask you to check out the charts of Infosys and tell us if you would take a trade before the numbers. Do the charts look so strong that you'd be comfortable taking a trade ahead of the numbers?
I would have taken a trade yesterday.
You would have?
Yeah.
Okay, what do you do now since you didn't?
No, I'd stay away.
If you had an existing trade, would you book money out?
Yeah, I think I wouldn't try to second guess the results. I have a feeling...
so that's not a chart call, that's just a prudent call?
Yeah, that's being safe, and I'm not sure if one can... normally I would prefer to sell options, but since it's an event risk, I won't sell any strangles because it could move either ways. and we have moved from 1105 to 1185 in the last 4 trading sessions. So things are looking okay. I don't think so. IT as a sector will do well. Infosys is going to 1280 in the next 6 months. I can stick my neck out and tell you that. As of now, I would stay away.
Okay, let's now put focus on Gravita India. This company started commercial production of PPCP granules at its plant in Chittoor in Andhra Pradesh. While this news came out 3 or 4 days back, the stock has been on a roll the last few days, and therefore let's get a buzzing stock. Joining us to talk about the impact of this same and how would the quarters ahead look like is Sunil Kansal. He's the CFO of Gravita India. Sunil, good having you. Thanks so much for joining in. Tell us, what would this capacity addition to the plant do? I believe the commercial production of PPCP granules has already started, if I'm not wrong, at the new plant.
Yeah, good afternoon. So this plastic recycling, which we are starting now in Chittoor, Andhra Pradesh, so which was a strategic move for our expansion of plastic recycling business in various locations. So this was part of our initiative. The total capacity we are going to increase is 6,000 tons per annum, and we have just started 1,200 tons out of this 6,000 tons. And so this is the scrap which is already part of the PP which we are recycling as a battery recycling we are doing. So this is a part of that polypropylene, and we are making the granules out of that, and granules will be supplied to some plastic molding industry. And we are going to increase furthermore 4,800 metric ton in next 2 months.
Okay. So you're going to take your capacity utilization to the fullest in the next 2 odd months, which means that Q2 onwards, you will be able to utilize this entire capacity of 6,000 MTPA.
Yes. So we are using our own PP, and we are also going to use some HDP and LDP plastic scrap, and we are going to utilize this entire capacity for this.
Sunil, the margins from the plastic business, I believe, are better than the other segments of lead and aluminium. If you could tell us, how will this increased capacity contribute to the EBITDA margins in FY19? Because I believe in Q3, we did see the margin contraction coming about.
Yeah, because after the lead and aluminium, we are going to expand now the plastic business, which is the better margin business, and we are going to see some upward trend on the overall margins of the group. So we are expecting from a move from around 9 to 10% to around 11 to 12%. So 1.5% margins should be upgraded after adding this capacity of the plastic recycling.
In FY19, Sunil, can we expect that for the full year?
So we can expect around 10 to 11% margin for the overall business.
And if you could tell us, what's the margin that actually you're targeting from only the plastic business?
So plastic business is going to be around 12 to 13% margin, which we are going to add. So other than this PPCP, we are already doing PET recycling in Nicaragua and Jamaica in Latin America. So and the overall capacity for this, including this 1,200 tons, is increased to 21,000 tons now. And we are further expanding it over a period of time.
So, well, if all seems to be hunky-dory, what's the quantum of top-line growth that you envisage you can get in FY19 or FY18? Is there a ballpark estimate?
So, we are already taking, last 2 years, we are taking around 50 to 60% growth in the top line and the bottom line also. So this growth of 50 to 60% in top line and bottom line will continue in FY19 also, including this plastic business.
So can we expect revenues of somewhere between 14 to 1,500 crore in FY19?
Yes, again, the similar growth will continue, like 50 to 60% growth, yes.
Okay, because so far in the 9-month numbers, Sunil, have been looking pretty good. You've already done what you did for the full year last year, 655 crore in terms of top line. Do you see the year ending with 4-digit revenues?
Yeah, we'll be more than this 4-digit revenue.
Okay, so looking to cross almost 1,000 crore for the 9 months. And could you tell us how are you looking to fund your capex plan that you've just spoken about, your plastic plant?
So this plastic line, we have just expanded approximately 28 crores for this 1,200 tons capacity. But we are going to expand more for additional capacity of 4,000 tons. That is approximately 75 crores, 75 lakhs. And but we are also expanding in lead business in different geographies. So the total capex plan for this year, FY19, is approximately 50 to 60 crores.
Okay, Sunil, we'll leave it at that note. Thanks a lot for joining us and taking us through that update on expanding the capacity for the plastic business of the company, which contributes more to their revenues. And as he highlighted, they are expecting again 50% top line growth in FY19, and they do expect to cross the 1,000 crore mark in terms of overall revenues for FY18. Remember, so far they've done nearly 650 crore for FY18. Well, before we head into a break, hear out Andrew Holland of Avendus Capital, who talks about rising inflation, mid-cap IT and more.
Bad news in all of this is that commodity prices, including oil, have spiked higher, and that's really not good for India and inflation. So whilst the figures we saw, yesterday in terms of the CPI, the underlying, message is that the core CPI is actually still rising, and that's a concern for me. And I think, if I think of a higher oil price going forward, then that's going to put constraints on the government in terms of deficit. The borrowings will have to rise, and yields are probably heading higher, and the rupees probably going to depreciate from here. So that's the kind of scenario which we're looking at the moment, which is not so good from a macro viewpoint. All markets globally, including India, are looking still a bit tired, and I think we're in this kind of trading range in the very short term. So we've seen the upside the first part of this month after kind of two steep falls in February and March. So again, it should make us feel a little bit happier, but we're probably kind of done in the very short term. Mid-cap IT has been an area which has done very well, and I think will continue to do very well. So I think that's probably where a lot of investors will continue to focus. Whilst we'll get reasonable results from the big players in IT, I still think we're a few quarters away from them kind of resuming strong growth. So it's going to be the mid-cap plays which probably have the better upside in the very short term. Those who are focused, purely on the kind of a few brands within their segments are doing exceptionally well, rather than those which are just introducing newer products which kind of confuse the consumer. So that's what's really happening within the two-wheeler, and of course CVs look as though the cycle's continuing there. So the whole sector, I think, is still looking good, but obviously you have to be very selective. And on the auto parts, it is unfortunately kind of still quite a lot of mid caps there. But for some of the larger caps, you're benefiting from both growth in India and growth offshore as well, in terms of the US and Europe. So like a few of the names there as well. My worry is obviously if oil prices go towards 80, this is not good news for India. And I think the other thing I just want to add in terms of what could be add to volatility going forward is if you went through the Fed minutes, which were released earlier this week, then the new Fed Chairman Powell is really saying that all of the people, all of the Fed representatives are saying that they expect growth to pick up strongly in the US, and therefore the rate increases might be more than just the three that's been indicated. Now, that I think the markets have not really kind of taken into account.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
RP Sanjeev Goenka Group, growing legacies.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
With countdown right here on Bloomberg Quint. This is what the rest of the world is up to. Well, not too much really, except for DAX, which is up about 0.5%. I would presume that the Dow futures too would be trading not with too much of a negative. It might be flattish, the Dow futures as well. So no big moves out there, but trading okay. So the rest of the world is not a sad place, which is a good thing. Before we get to the Fab Four though, Hemant Kapadia tells me that there is a stock which is just breaking out. And it's important for a trader to take note of it. Hemant, what is the stock?
Yeah, TVS Motors volume is, we still have 20 minutes left. Volume is highest in the last 45 trading sessions on NSE. We have to look at the delivery marking. A 4.5-month supply line will, if it closes at this level today, will have overcome the 55-day exponential moving average. Indicators have turned positive. Looks good.
So buy at the current levels?
Yeah.
Wow, it's turning out to be an auto day. Let's figure if Yash Upadhyay has some auto stocks in his list of the Fab 4 stocks that he's drawn up. Yash, good afternoon. Autos?
No, actually today is defense the theme for my Fab 4. So we kick things off first of all with Genus Power. This one had gained as much as 4% after Kotak Securities maintained its buy rating on the stock and have set a target price of 79 rupees, indicating a return potential in excess of 50% from the current levels. The management seems quite positive on the demand outlook for meters, and on the back of their recent order wins, their order book has more than doubled from FY17 at about 650 crores to over 1,200 crore rupees. They also expect the company's earnings to grow at a compounded annual growth rate of 24% over FY18 to FY20. As I was saying, Premier Explosives had gained close to 7% today after the company said that it has partnered with French defense firm Nexter for the manufacturing of bimodular charge systems in India. And Ashok Leyland too is up about 3% after receiving a big order worth 100 crore rupees from the Ministry of Defense for the supply of its high mobility rocket carrying vehicles. And finally, we're also looking at Rupa Company. This one had gained as much as 14% today. Its highest intraday move since September of 2017. Volumes too coming in significantly higher at over 40 times the 20-day average. Back to you.
All right, Yash, thanks a lot for bringing those Fab4 stocks of the day. Can we just pull up a Glenmark that's gone up nearly 4% in trade, and it's featuring among one of the top gainers as well in the F&O securities. 4.3% higher, Manav. Any trade at 582?
Yeah, the current levels, what we see is, the stock has been bouncing from its oversold levels, and importantly, it has breached its important weekly resistance of 565, 570. And looking at the volumes, it also confirms a short-term trend reversal. So I think in the near-term perspective, the stock could see a short-term retracement rally towards the levels of 600, 610. On the immediate basis, I recommend a stop loss of 516 to this.
Okay, 600 or 610 can be the next target on Glenmark Pharma. This is what Manav is indicating. Well, let's move on. It's not been the best of start to 2018, with the Indian benchmark indices down nearly 1% in trade this year. But Amit Sarkar pulls out 4 stocks with a market cap of more than 10,000 crore that are correction proof. Why? Because they have not only withstood this market correction, but the earlier one as well. Let's go across to him and find out. Amit.
So first, let's see how the Indian benchmark, that is the Nifty 50, has performed in the last 2 years. So if you see in this chart, there are 2 correction phases and 2 phases of rally. So from 25th Feb to 8th September, the markets gained by more than 28%. Post that, they declined by close to 12% till 26th December. Post that, we again saw a rally of close to 41%, which lasted till Jan 29th, when the markets touched their all-time high. And since then, we saw a decline of close to 9% till 4th April. So if you see, we have selected stocks that have market capitalization of more than 10,000 crore, have gained more than 28% in this time period. Then they again managed to gain more than 12% in the second, when the markets were declining, they managed to fall less than 12%. Then they again managed to gain more than 41%, and then again managed to fall less than 9%. So we get only 4 stocks: HDFC Bank, Maruti Suzuki, Bajaj Holdings, and Petronet LNG. Now these stocks have not only managed to outperform the markets when they were gaining, but were also relatively less hurt when they were declining. So when the markets gained more than 41%, these stocks gain in the range of 45 to 86%, and when markets were declined close to 9%, these stocks declined in the range of 6 to 8%.
Wow. So, well, Amit, I think, has taken 2 previous cycles, or actually 4 cycles, right? One rising, one falling, and then one again a rise and a fall. And during these 4 cycles, these 4 stocks have outperformed the benchmarks in a meaningful way.
Yes, exactly. So when the market gained close to 28%, these stocks gained more than 28%. When they declined by 12%, these stocks fell less than 12%. Then again, when the markets gained by 41%, this stock gained more than 41%. And when they declined close to 9%, these stocks fell less than 9%.
Wow, Amit, thanks so much. The top 2 names don't surprise me really, but Bajaj Holdings and Petronet LNG, some fairly interesting names out there, outperforming the last 4 moves on the indices. Amit, thanks for putting that into perspective. Let's pose that question to Amit Jeswani, founder of Stallion Asset Management. He joins us right now on the show. The last that I remember speaking to Amit, he was not bullish. He believed that valuations are out of whack and people should be careful when they put in money. He had sitting on a lot of cash. Now, Amit, has this move surprised you? And when the markets dipped to 9,900, did you put in money or did you not get a chance?
No, so we're now on 9% cash. So we got lucky and did put in some money, Neeraj. See, we still think that the small cap and the mid cap will take about more than a year at least to hit new highs again. So that trades remain. See, the quality of stocks that are moving higher are market leaders, right? People should concentrate on market leaders right now and being very high quality market leaders, the guys who are generating free cash flow, because that's where the big alpha would be. If you look at what the screen is saying, the screen normally says a lot of things. So in a retail, DMart's hitting new highs, Titan's hitting new highs in the jewelry space, where other jewelry counters are down anywhere between 40-50%. On the steel sector, which is a very cyclical sector, the leader JSW Steel is 2-3% away from lifetime highs, whereas the entire basket is 20-30% away from lifetime highs. So you can take any sector, Jubilant Foodworks. So basically the leaders of every sector are that's where the money is getting parked. So the next 2 years, we are going to it's a bowler's wicket, and you don't try to be Sehwag on a bowler's wicket. It's better to be either Dravid or Virat Kohli. We choose to be Virat, but yes, that's how we're going to play. We're going to be defensive, and it's okay to make 25-30% a year, and that's the kind of returns we think that quality compounders can do the next 2 years.
Amit, did you get to buy Jubilant Foodwork and Titan?
So we didn't buy Jubilant Foodwork and Titan because these are not stocks growing at 25-30%. So a criteria. Okay. So we are not buying stocks. We are buying a strategy that we follow. And in our strategy, we only buy companies that are young, entrepreneur-driven, and companies that can grow from, like, we won't buy an HUL. HUL has grown sales in the last 4 years from 25,000 crores to 34,000 crores. We would buy, let's say, a Winnie product, which has grown sales many times. So basically, we buy young companies and companies which are taking on market share from the leaders or the leaders. Any company which is taking on market share while generating some free cash flows, that's where we look at.
You share some names of these young companies that you've been buying?
So our portfolio, our core portfolio is largely on the infrastructure side. That's one place that we've been bullish on, not from today, but for like more than a year right now. See, the thing is that there is no competition. Like in infrastructure, there's a large opportunity size, there's a huge tailwind, but there is no competition. Now, I went out and saw every project, EPC project, or bought that time, project that was bid between 2007 and 2011. The number of bidders in every project was between 26 to 37, right? So that were the number of bidders. Right now in the HAM projects, the number of bidders are 4 to 5 maximum, and L3 and L4 are just out of race. So it's just like 2-3 series bidders in one project. So you can make a lot of money. See, competition kills profit. Until the time there is no competition, we will keep holding on to that bet. The other bet that we have in our portfolio is the NBFC space. That's something that everyone knows, and we've been long for a very long time. Those are the kind of bets that we are looking at. The new additions that we have done, that's done on the real estate side, and that's where we believe there's a very large trend that is possible, a very large trend which can make a lot of money for good investors.
Amit, I'm going to push that a little bit forward. By the way, just before I get back to that conversation, need to mark 2 or 3 names out here. Indiabulls Ventures has this big move today, 15% higher. Rupa and Company about 12% higher. There is strength. Navneet was talking about the fertilizer names. Chambal, RCF, Deepak Fertilizers, some big moves that have happened here. And look at TVS Motors and Escorts. They are sitting pretty today, trading at the day's highs. In Escorts' case, trading at life highs for itself. So a clutch of names doing really, really well for themselves. Good going there. Amit, just scratching that surface of real estate. You're going for asset owners, you're going for executors like Godrej Properties, which has just kind of turned the business model upside down, so to say, and now others are following suit. What is it, or where is it that you're finding favor? Because one thing that these companies are not doing is generate cash flows.
See, I'll tell you, this model is a little different. So there's a change which is happening. The first thing is disruption creates trends. So we look at disruptions because that's a big change which is happening. Am I bullish on real estate as a whole, as a sector? Absolutely not. So I am very confident that 80-90% builders will never ever build a project again. Like in Bombay alone, there are 700 builders who are registered on the RERA website. Why do we need 700 builders? There's no other country in this world where there are 700 builders. So what is going to happen is companies like Godrej Properties. I'll just explain you the business model of Godrej Properties, or smaller names that we bought into. What they have done is basically they run on a joint development model. Now, what happens in a joint development model? You don't have to put in money up front, but you just give them like 20% stake on your on basically the project, and you can keep just on the photo itself, because you are a Godrej, you can generate a lot of cash flows up front and then execute the project. So people are buying brands. If you look at Godrej or Puravankara, example, Puravankara 2 weeks back finished in one day he sold 800 crores worth of project. So that's where the big money. See, real estate is a 50-year-old proven business model. So real estate builders are going to be there for the next 10-15 years. It's just about which ones. And I think the 10% people will take over the market share of the 90% people, and there'll be a lot of money made in this trade. And these guys will generate a lot of free cash flow because they are not investing any money upfront, but they are getting cash flows upfront by selling it like pre-launch and pre-bookings. And the unorganized space guys will never get pre-bookings. They're not getting pre-bookings. People don't trust them. And the guys who are trustworthy, branded real estate, these 5-7, in every micro market, there'll be 3-4 winners. You just have to buy the leader of a micro market and just hold it for the next 3, 4, 5, 7, 10 years. And it's a very long trade. It's not a 1-2 year big delta trade, but we are very confident on this trade. Like it will generate 30-35% CAGR for sure. That is what we think.
Yeah, well, I can think of two names. Godrej Properties is one. The other one, which is now starting to follow that model in Bombay, is Kolte Patil. It's really getting its act together. A lot of existing buildings are approaching them for redevelopment projects. So, well, take your picks. Please do your studies properly. Okay, 3:15. That time of the show where we tell you what dealing rooms are recommending in the session today, and then we'll of course get in Navneet to talk about the FNO stocks and which are the stocks that could enter the ban or come out of the ban. But first, let's start off with what dealing room sources are telling. Yatin and Darshan, both of them join in on this segment. Gentlemen, both of you, good afternoon. Darshan, let's start off with you first.
Yeah, so one of the stocks that's been actively spoken about today is Sun TV. It's not doing much, but it's still up in trade today. What we hear from dealing room is that over the next 1 week, the company may meet several funds and investors, and in several of them what we hear is that the promoters themselves, the Marans, probably will be going and meeting investors. So that's something that is being actively spoken about. The next stock is Bajaj Finserv, and over the past few days the counter has been under severe pressure, and that's because a large domestic mutual fund is trimming its portfolio and trimming its position in Bajaj Finserv. So that is the one. And finally, two stocks in which dealers bet as momentum plays. First of all, Balkrishna Industries and Escorts, both of them trading at record highs, and the street does believe that the momentum will continue on both these counters. But Yatin, what are you hearing?
Well, pharma stocks in focus, and we have seen Divi's, Glenmark, all of these stocks surge in trade. So in general, dealers are recommending buy on select pharma stocks. Divi's been one of them. Buy today, sell tomorrow kind of a strategy. The stock is at a multi-month high, so watch out for Divi's Laboratories in particular. Also watch out for TCS. Yesterday also we were flagging off that how there is a lot of institutional interest as far as IT stocks are concerned. So both TCS and Infosys have been doing well. Of course, TCS has come off from the day's high, but still dealers are recommending a buy. And remember, the company completes 50 years since inception, and this time probably the market men are expecting some bit of golden jubilee reward to its shareholders. Probably it can be in the form of a bonus or a special dividend. So that is the market speculation currently. So watch out for this one as well. And finally, Axis Bank, that is one stock wherein we are looking at some FII selling which is happening in. Probably private banks in general are looking at some bit of selling which is happening, and dealers recommend shorting some private sector banks based on the FNO trends and the fund flows.
Watch out for these. Thanks a lot for that, Yatin, as well as Darshan. Also watch out for stocks that could enter the ban or come out of the FNO ban on Monday's trade. Navneet, what's the list looking like?
Neeraj, one stock which could enter into the FNO ban on Monday, and that is TV18 Broadcast. We've seen some OI build-up coming about for April futures as well as a couple of the option strike. If you look at the total open interest as of yesterday and as a percentage of market-wide position limit, it was almost 91. For the stock to enter into the FNO ban, it has to breach the 95% mark, and it looks like that it could breach that mark. What could come out is Jet Airways, because we've seen a lot of shedding of open interest since the time it has gone into the FNO ban. The total open interest as a percentage of MWPL yesterday was just close to 80%, and remember, for a stock to come out of the FNO ban, it has to breach the 80% mark. So there has been some unwinding, but just a caveat here, the trends do change in the last 10 to 15 minutes of trade. Otherwise, you can watch out for both these counters, Jet Airways as well as TV18 Broadcast. Well, those are the stocks that could be in focus on Monday's trade, but right now we've seen some bit of recovery coming in for the Bank Nifty. If we just pull up the intraday chart, yeah, we did slip into the red, and there is recovery which has been seen for Bank Nifty right now. Manav, anything on Bank Nifty, 25,200, since you had a buy call?
Yes, absolutely. In fact, the important thing to note is that, the yesterday's lows, which are close to the levels of 24,800, which also coincides with 200 EMA. So as long as these levels are held, we can expect the short-term trend to continue on the upside. The immediate levels to look out would be at 25,400. So I sense that after a short-term consolidation, since the momentum indicators still remain in the buy mode, we will see this breakout happen on the upside because the short-term trend remains bullish and after a weekly breakout. So maintain a buy on dips, and I sense 25,700 is the levels to look out for in the near-term perspective.
Okay, we'll watch out for those. I want to ask Amit about a couple of stocks, but before we do that, it's 3:20, so let's get in closing strategies from both Hemant as well as Manav. Hemant, to you first. Your top closing strategy.
Indiabulls Housing Finance, BTST.
BTST on Indiabulls Housing Finance. What's the stop and the target?
It's currently at 1347, stop loss of 1339 and target of 1363, 8 and 16. 8 rupees stop loss 16.
You would look to sell it off within the first half an hour of trade. You would expect the target to be met then?
Yeah, I think first 15 minutes because I think Nifty is going to go for a toss on Monday.
So, okay, it's a very quick trade. Be careful if you're indeed following him in. Manav, what about you? Your top call?
I like Reliance at current levels. If you look at the chart perspective, the stock has actually breached its falling trend line drawn from its recent highs, which are indicating in possibly near future you could see Reliance actually going to the new highs. And also after a short-term consolidation, the prices are also trading above its intraday levels. I recommend this stock to be taken not only for a BTST but also can be taken for a positional bet. 925 can be the stop loss. The immediate target is 960 and a positional target can be close to 1000.
Amit, you have your sets of filters that you set up for companies. Do any of the retail companies or any of the fertilizer companies fall within those filters? Because those are two pockets that over the last few days have been really abuzz.
So we own two fertilizer stocks in our portfolio. They're not very high growth stock, but the delta there is a change again. So we look at changes change creates wealth. So wherever there's a very large delta possible, we get in. So we got into Chambal and Coromandel about a year back when that's when we were basically front running the DBT trade. And we hold these stocks and basically Chambal, the promoters buying themselves. So you don't have a lot to worry. And they have a very large expansion next year. If you look at it, basically they're going to have a 3 million metric ton capacity. And for 1 million metric ton, they're spending 6,000 crores. So you can do the calculation, what would be the replacement cost. Basically, we bought it at 2,500 crores market cap. So we bought them really cheap. But the trade is there. See, these rural, if you look at the whole rural pack, okay, from Escorts, these are the Escorts, Shakti Pumps, basically all tractor companies. These were the first guys to hit new highs. And whenever that happens and the entire sector hits a new high, you understand that those guys are going to be the leader of this small bull market. But are they going to be like big multi-baggers? I don't think so, and retail is just too expensive. So DMart, I don't know, I cannot buy DMart at 130. Like sell-side analysts will try to justify it, but it's just too expensive and there's just no margin of safety at these levels. So risk reward is very necessary. We love as a business model, we like VMart. That's a very, very, very good business model, but it's just too expensive to buy these stocks.
Okay, that's the view coming in a couple of your retail stock. Pull up Dewan Housing Finance, that's also surged today. Steel Authority has seen gains of nearly 3.5%. In fact, the entire metals pack, which was witnessing some profit booking yesterday, has bounced back today. So Steel Authority is up nearly 3.5%. Amit, come in here on the NBFCs, since the bond yield seems to have cooled off. Anything that you like here?
We like Edelweiss as a business. This business, I believe it's still a very young business. So 3-4 years from today, they can easily triple their revenues. If you think about it, ex-insurance, Edelweiss will make about 1,000 crores of profit this year. The market cap is about 20,000 crores. So basically, you're paying 20 PE for a company which is growing at 30-35%. So last few years, it's been growing fast. We hold it for a long time. But in the next 3, 4, 5 years also, we believe that it will grow at 35% plus. The business model is very easy. They get the wealth management capital market business doesn't need any capital, right? So it's a 150% ROE business. They use that money, whatever money they get in the capital market and the wealth management business, they use that money to deploy on the NBFC business. The NBFC business is It's a 20% ROE business. So basically all cash flows from a cyclical capital market businesses are deployed in a secular lending business. And lending is going to do well, you know, with 50%, 60% of PSUs under damaged conditions. You know, that's where the lending growth is going to be. And NBFCs like Edelweiss and many other more, like we own 3 NBFCs. So all these guys should do well. Edelweiss will grow at 30-35%. I still believe it's too young. It's too young a company. It's too aggressive, and they're doing the right things.
Well, they are the stocks, all of them. Actually, maybe except IIFL, the Motilal Oswal, Edelweiss, and the others have come off. Motilal Oswal actually quite a bit. IIFL has held fort, but Motilal Oswal has fallen from 1550 all the way to 1044. Went down to 3 figures, and Edelweiss too, from a high of 309 odd. Edelweiss has come off currently at about 263, so relatively has fared a lot better. Okay, last couple of stocks with our experts, one on the gaining side, one on the losing side. To you first, Manav, Delta Corp.
The stock actually has breached its important short-term support levels. You know, the stock actually has been declining from the highs of 390 and is nearing the oversold zone. So I believe that as long as the stock trades below the levels of 270, 274, you will witness this selling pressure to continue. The immediate lower zone support for Delta Corp will be close to the levels of 230, 235, and maybe for the near-term perspective, the selling pressure would continue, and we will see the retest of the lower levels.
What about BPCL, Hemant?
We are hanging on for dear life. Since 23rd September 2016, we haven't closed below 400 on the weekly chart. We're sort of over there. So till this doesn't break, I think it's in a no trade zone. If this breaks, I think it's going to get slaughtered. But it's oversold, so I have a feeling that 400 would hold. If it holds, once again we're due for a recovery, or at least it'll sort of hang around.
I mean, any view on MCX? It's moved from those levels of 700 to now trading around the levels of 759 or something.
Frankly speaking, I don't think it's a double bottom. The double bottom will get confirmed at 835, but worst seems to be over. I don't think it looks currently exciting. Today we are walking into resistance from the 55-day exponential moving average. Navneet, volume on the NSE is highest in the last 9 trading sessions. So I have a feeling it's not going to go down much. It's going to consolidate, move sideways and go up. The stock has posted a short and possibly a medium-term bottom. Navneet.
Okay, that's MCX India, which is trading with gains of nearly 2.5%, and few minutes for markets to close. Let's head across to Neeraj to find out how exactly today's closing is panning out. And Neeraj, it looks like this is the 3rd straight week of gains that we're seeing for both Nifty as well as the Nifty Mid-Cap Index.
And the last few days we've been talking about the markets ending with green. The only difference is that the previous 2 days we've had the markets surging in late trade. In today's session they've come off a little bit. The Nifty Bank, the principal culprit though, trading marginally in the green. The mid caps and the small caps are about 1/4% as well, I would presume. Actually 1/3%. The mid caps had a fair bit of a rally in the last 45 minutes, so good going there. Let's look at what's gained and what's not. Adani Port about 2.5%. IT, save for HCL Tech, had a good day. So the likes of Wipro, TCS and Infosys cooled off a little bit, in fact quite a bit during late trade, but still marginally in the green. And Reliance Industries continues to rise and shine. The big boy is up about 1.25%, arguably should be amongst the biggest contributors in the session today on the gaining side. On the losing side, rate sensitives dominate. So SBI, Axis, Yes Bank are amongst the 3 stocks that are correcting. ITC is at about 0.5% downtick, but otherwise not too many losers really, which stand out. The oil marketing companies like BPCL on the Nifty, of course, have corrected about 3%, and they stand out on the Nifty. But what about the mid caps and the small caps now?
Well, Neeraj, for sure, in today's session, they outperformed the benchmark indices. Let me take you through a couple of the stocks. Indiabulls Ventures, that went up in the second half of the session, and that's closing with gains of nearly 13.5%. The entire fertilizer pack was buzzing in today's session right from the word go when the market opened, and something like Chambal Fertilizer, that touched its fresh 52-week high, so good gains were seen for this one. The other one from this pack was Fact, that also saw good gains coming about. It saw gains of nearly 6 to 7%. Rupa and Company was the other one which registered stellar gain. This counter also went up on very high volumes today. Escorts, Pidilite are the other two counters which touched their fresh lifetime high. Also on the futures and options side, we've been seeing some fresh long positions coming about for both these stocks, Escorts as well as Pidilite. What went up in the second half of the session was also something like Glenmark. That rose nearly 4% in trade. And Steel Authority, we've been talking about metal stocks. They bounced back today. Steel Authority was one of them. On the downside, you had Dhampur Sugar. Remember, the sugar stocks have been under pressure because of the prices crashing. So that was also down in today's session. Bharat Electronics is the other one which tumbled nearly 3%. And one of the biggest losers from the futures and options market was something like JP Associates. That was down nearly 3.5 to 4%. And also remember, that's the stock which is in the F&O ban, Neeraj.
25 seconds to market close, and the heat map will show you that it's split in the IT names, in the banking names, and OMCs continue to drag lower. Let's pull up the heat map, and this is what the picture is looking like. Even Stevens for the large cap space, so not much to choose from, to be honest. And the market's ending about flat for the Nifty Bank and about 0.2% higher for the indices. So on balance, not a bad week. Actually, if we can get firstly the daily performances, the market breadth will come up on your screen and the contributors list will come up on your screen, maybe even the turnover. The market breadth converging after noon, which is when we saw that big crash come in. Then the turnover as well as the contributors list. This is the turnover, and par for the course, I would believe. Not too much of a deviation.
Yeah, just that the F&O turnover has come down, which was expected. Yesterday was a weekly options expiry for Bank Nifty. Yeah,
and then the contributors list, Reliance should be right up there. Yes, right up there for the gainers, Kotak Bank, HDFC amongst there. But SBI on this other side, Maruti Suzuki is right here as well. So it's actually split. Tech Mahindra on the gaining side, HCL Tech on the losing side. So no clear winners here, but the weekly performance, Navneet, is the more interesting one, because as you said, it's been yet another week of gains, and yet another week of gains for the commodity names.
Yeah, Hindalco, and we know the reason why. It's because of aluminum prices going up on LME, and what a big session. I mean, it was a good week for Hindalco, up almost 11%. I think the other one is TCS, Tech Mahindra, which are in focus. The entire IT pack went up. Something like Titan, that touched its fresh lifetime high. HCL Technologies, and if you remember, most of your constituents, I guess, IT stocks in the Nifty have been gaining. But on the losing side, I think it was the oil marketing companies. Clearly, the top three losers are BPCL, HPCL, IOC. They clearly didn't have a great week, and the heavyweights like State Bank of India, that also put some bit of pressure on the markets. And Tata Motors, which was your top performer last week, saw some profit booking this week.
Okay, so that's the summation of how trade was. Final thoughts from our experts. Amit, if you had to necessarily buy a large cap name, let's say there's an investor or a set of investors who find safety only in buying into large caps, would OMCs fit the bill? The price and the time correction, does that give comfort?
Oh no, I don't even track the OMC. So we don't buy companies which are government. We need entrepreneurs. Entrepreneurs create wealth, and historically, government's been the worst entrepreneur. So you need a guy who can run the show. So we bet on management who want to make it big. So a safe large cap bet, I would say, is Piramal Enterprise. I believe that is one stock which we believe it's ready to, in the next 2 years, we strongly believe that the profits will more than double, and that's where we believe. The valuation is trading at 18 times FY19. There's going to be a demerger happening. So that's one big trade, a big large cap that will still give you 30% plus returns. You've got Ajay Piramal, who's running the show. You've got Khushru Junjuna, who's running the finance business. This company again will grow at 30-40%. So we back very strong entrepreneurs, and government is the worst entrepreneur you want to back. So this is not something like OMCs is something that we will definitely never play.
All right, Amit, we'll leave it at that note. Thanks a lot for joining us today and taking us through your thoughts on the markets and also different sectors. Well, we're counting down to Infosys earnings, and Sajit Mangat is standing by at the Infi headquarters at Bangalore. Sajit, if you could hear us.
Thanks, Navneet. We are at the Infi. Yes, I can. Navneet, can you hear me?
Go ahead, yes.
Yeah. Okay. We are at the Infi headquarters in Bangalore, and the company is expected to come out with its fourth quarter earnings in a short while. This would be the first full quarter where the new CEO Salil Parekh would be strategizing, and what the market is very clearly looking at is the kind of guidance that Infosys is expected to come out with. Salil Parekh had in the January conference had indicated that he would be reviewing the entire strategy of Infosys, and in the April earnings he would be outlining what kind of strategy that would be going forward for the company. If you look at some of the earnings previews which are coming in, the Bloomberg estimate says the revenues in dollar terms is expected to go up by nearly 2% to $2.8 billion. EBIT margins will be largely flat at 24.4%, and profit would be boosted a bit by reversal of tax. This is primarily the advanced pricing agreement pricing agreement which it has with the United States, as a result of which there would be some kind of tax write back that will come in. So that would be one thing which would be there. But the key thing which needs to be watched out for would be the strategy that Infosys will be taking going forward, and what Salil Parekh has to say about the demand environment, the pricing environment, and the challenges that he sees going ahead for Infosys.
Ajit, do keep us updated. We are counting down. Well, we are hoping it should have come out, but maybe it'll come out in just moments from now. Thanks Ajit, for getting us that update. We'll leave you to go ahead to the headquarters and the building. Okay, final thoughts from our technical experts as well. Manav Chopra, just looking at the way the indices have closed for this week, the last couple of weeks as well, how do you anticipate the next week to be? It's difficult because there are earnings starting meaningfully from Wednesday onwards, but still, if you can predict.
See, looking at the chart perspective, definitely things looks positive. We have seen 3 weeks of consecutive rally. Most importantly, this rally has not seen any corrections, and weekly close above 10,350 looks quite positive. So, that should be one of your trail stop loss is what I can say for any short-term trades going forward. And as long as if you see a short-term retracement towards 10,400 or 10,380, I think one can also get into it, keeping a stop loss of 10,350 for a positional long trade.
Okay, so Manav is still suggesting to hold on to a positional long trade on Nifty and Bank Nifty, but Himin, what about you?
Below 10,450, I see 80 to 100 points on the downside. I think that process should start on Monday. So I'd be bearish for a few days. We are heading towards 10,70227, 10,736. In a short term, I think we are a bit overdone. We are due for from the top, maybe 100-150 point correction. The undertone is still bullish.
Okay, undertone is bullish, but Himain expects a bit of correction to come by next week. Thank you so much, both of you, Himain as well as Manav. Have a great weekend. But with that, it's a wrap on this edition of Countdown. We continue our coverage on the other side. Stay tuned. Infosys numbers will be coming out anytime now.